Dumela, I am going to do the cash flow statement from the 2016 IEB supplementary examination. We have information relating to Net Start Limited, and they gave us an extract from the statement of comprehensive income for the year ended 31st of December 2023. You've got cost of sales amounting to 3,300,000. I don't know if you're going to use that. And we have depreciation of 57,000. As well as income tax amounting to 313,600. That depreciation, I will take it to note number 1 and put it under adjustment for depreciation will be 57,000. But I will have to read the entire paper to figure out if that is the correct depreciation amount. And you will get that information under additional information. With the income tax, I can actually use that income tax amount of 313,600 to get the profit before tax, which I will take to note number 1, which is cash generated from operations. But I'll have to be given the percentage. I cannot assume what the percentage is. They need to give me the percentage. I hope I am clear on that. You don't assume the percentage. It has to be given to you. When I talk about the percentage, I'm simply talking about the income tax rate. Okay. Moving right along, I will look at my extract from the statement of financial position. I'll know that I have tangible assets at the beginning. Now, the fact that it's appearing here, those tangible assets will be at carrying value. Okay, they will be at carrying value. So the carrying value of my tangible assets at the beginning of the year was 6,448,200. And at the end of the year, it was 6,484,200. Under current assets, I've got inventory, but for last year, I have 382,000. For this year, it's a question mark. I don't have it. And I'm given trade and other receivables as well as cash and cash equivalents. However, because of those 2 question marks under current assets, it makes it impossible for me to even calculate inventory. I need to be given at least 2 out of 3, but in this case, I'm given 3 question marks. So it'll be impossible for me to calculate it. I'll have to read additional information. And this is what people normally don't remember, that ordinary shareholders' equity is made up of ordinary share capital as well as retained income. That's it. And fortunately, here we're given ordinary share capital and retained income for both years. Then we've got our non-current liabilities. You will notice that here our mortgage bond at Stanfin Bank has gone down. Will that affect interest? I don't know. I'll have to read further, right? And for current liabilities, I didn't see anything about my bank overdraft. I didn't have it last year, but this year it's a question mark. And when you check cash and cash equivalent, there's nothing there. So there's a high chance that I might have had a bank overdraft, but I'll have to read further. Okay, so I'm given trade and other receivables. For trade and other receivables, the only thing I will exclude here will be SARS income tax, and you just compare. Trade and other payables, I will exclude SARS income tax as well as shareholders for dividends and just compare. This table obviously tells me that my interest on loan is capitalized. I'll have to manipulate and find certain question marks and work backwards to calculate what I need. And under additional information, they say that Netstar Limited had 1.350 issued shares on the 1st of January 2023. Now, you might have noticed that the beginning of the financial year is the 1st of January 2023, since the year end is the 31st of December 2023. Okay. I should have asked you to highlight this earlier on, because you can't work unless you know what your financial year is. And normally for you to get the financial year, you'll have to be given the end of the financial year, which is the 31st of December 2023. So we shall be happy about that, right? Let me just read further under additional information. I've got additional shares were sold at 3 Rand per share on the 1st of July 2023. No shares were repurchased during the year. That's good. Nesta declared and paid interim dividends of 30 cents per share on the 1st of September 2023. All shares qualified for these dividends. That include the shares that were issued on the 1st of July 2023. All right, I'm gathering my information here that I will need. And then they say the period for which the closing stock on the 31st of December 2023 is expected to last. So they're telling you that whatever stock you have on account at the end of the year, it is expected to last for 73 days. So when you calculate your stock holding period, okay, because they're telling you that you are going to hold this for 73 days. You won't use average, you will simply use closing stock on the 31st of December 2023, because they are specifically stating that that stock will take so much to sell. Had they said the stock holding period on the 31st of December 2023 was 73 days, then we're going to use average. But here they're telling you that the period of which closing stock on the 31st of December 2023 is expected to last is they're being specific. They're not saying the entire stock, they're being specific that the stock on the 31st of December 2023 will last for this long. Please check out my videos on the cash flow statement where I dealt with these ratios, okay? And they say fixed assets were purchased during the year. That's good. A machine was sold during the year at its carrying value of 5,000. Oh, that's great. They didn't say anything about depreciation, so it means that the depreciation that was given to us is correct. And it didn't say anything about um, well, in this case, they actually did. They said the machine was sold at its carrying value. So that 5,000 will also include under investing activities as proceeds from the sale of tangible assets. You need to remember whatever you put under the sale of tangible assets, it should be the selling price, guys. The selling price here is equal to the carrying value. Okay. I am just going to go back a little bit and um, the reason why I'm going back, guys, is because they didn't say anything about tax and I need my profit before tax. So I'm just going to go back to check, just to double check if indeed they did not give me the percentage or the tax rate. And if I'm not giving the tax rate, then it's a problem. I'll have to find my way to calculate my profit before taxation. Uh, I'm not given profit after tax. I'm not given the tax rate, which makes it impossible for me to calculate my profit before tax. Basically, what am I going to do here? My first step, okay, I realized that I'm given nothing, so they didn't give me anything at all. Uh, I've checked here, there's nothing about the tax rate, nothing about profit after tax. Even here, there's nothing about it. Um, Here, there's nothing about it. And there is nothing about it. Already in my mind right now, the only thing that I'm thinking about is my uh, retained income. So if I'm not given any of those, I'll have to prepare my retained income. But don't jump to conclusions yet. I'm firstly going to go to my profit before taxation, reconciliation between profit before taxation and changes in working capital mode, and check if I can work anything out there. It's possible that I can work something out. And obviously, if I'm not given profit before tax and I can't work it out, I'll have to find another way for calculating it. Firstly, I am given depreciation, which is good. It was 57,000, so I will just include it then. What about interest expense? The only loan that they told us about here, or they gave us, is this one here. So I'm just going to manipulate that, which is loan statement reflected the following on the 31st of December 2023. And they gave me the balances of the loan at the beginning of the year and the end of the year. It was given to me in my extract from the statement of financial position. So we have 400,000 at the beginning of the year. We have 320,000 at the end of the year. I will simply use that to calculate what I need. And let me just do it quickly here. So basically, this is what I'm going to do. I have that question mark at the beginning of the year, and I have the question mark at the end of the year. All I'm going to do is to make sure that I put my, well, they didn't say anything about the repayments. It's actually what we need in this case. And they gave us the interest. I didn't see that. So I don't even need to calculate the interest, okay? I don't need to calculate the interest. So I'm just going to take that 50,350 and put it in my note. And when I add this 107, when you add those two, 57,000 and 50,350, it's supposed to give me adjustments in respect of. When I add that 107 with whatever I have, with which is, in this case, it is X, okay? I don't have my profit before taxation. So this one here is X. For me to get that X, I'll have to work backwards because normally if I take X and I add it with this 107,350, I'm supposed to get that, which is 1,134,350, which was given to me in the answer book. So all I'm going to do is to work backwards by subtracting that 107,350, and it'll give me 1,027,000, which is my profit before taxation. And now I'm done with the top part. Now I'm going to go to inventory. With my inventory, if I remember very well, guys, when it comes to my inventory, I was only given inventory for the previous year. I wasn't given inventory for the current year. You see, it was 382,000 in the previous year. And this year it is a question mark. And the only thing that is close to the calculation of my inventory that can get me the value of my inventory is this one here, which is stock holding period. That's it. Now, when I use my stock holding period formula, I will simply use the value of your closing stock. So your stock holding period will be closing stock divided by cost of sales divided multiplied by 360. I don't use average here. And this is because they said the period for which the closing stock on the 31st of December is expected to last is 73. So there I don't use the weighted average. I'll just use the value of closing stock on the 31st of December, of which it wasn't given to me. So I'll just write it as X. Then just manipulate this, multiply both sides by 3,300,000. And this is what you will get. And then afterwards divide by 365 to get the value of X. X will be 660,000. Once you get that 660,000, it is the closing stock for the current year compared to the previous year, which was 383,000. And you will notice that your inventory has gone up. It's an increase. And an increase in inventory, remember, it's a cash inflow. So you'll take 660,000 minus 382,000. It'll give you a cash outflow of 278,000. Okay, an increase in inventory is a cash outflow. I repeat, increase in inventory is a cash outflow, as it means that you bought more stock. And a decrease in inventory is a cash inflow, as it means that you received money from selling your stock. So an increase in inventory is a cash outflow, as I've specified. And that's it with respect to increase or decrease in inventory. Now let's go to trade and other receivables. With trade and other receivables, I already saw the note, which is trade and other receivables. And I said in that note, the only thing I am going to exclude was income tax. Okay. And that is because this is shown separately on the face of your cash flow statement. So 13,400 has to be excluded for 2022. So for 2023, I'll still have 148,000 And for 2022, I will only take 110,000 and add it with 4,400, which will give me 114,400. And I'm going to compare the two, which means that my trade and other receivables has gone up. And if my trade and other receivables has gone up, that is a cash outflow. It means that I was buying stock and I was just giving it to my customers so I lost money. I could have sold that stock for cash, but I lost money. That's why it's a cash outflow. And my cash outflow here, and this is one thing that my students keep on leaving out. And I don't know if I'm saying anything wrong. You always, in trade and other receivables, you always exclude sales income tax. And in trade and other payables, you exclude sales income tax, only SARS income tax, not SARS VAT. Most people, when they see SARS VAT, they want to exclude it. I don't know why. And I specify it's only SARS income tax. You exclude it in trade and other receivables as well as trade and other payable. Exclude means if it was included, you subtract it. If it was not included, you don't add it at all. Okay. In this case, I decided not to add it at all. So you had a choice of taking 127,800 minus 13,400. That is when it's included and you exclude it. Or you just take 110,000, add it with 4,400. There it is, it was not included, so you don't subtract. So you just add those two, and then that will give you a trade and other receivables for 2022. Sometimes I only give my kids these final amounts. And then I'll tell them that sales income tax for 2022 was 13,400. And then I put brackets there. I put open brackets, DR, and then close brackets. That means my sales income tax was on the debit side. If it's on the debit side, it's included in trading other receivables. So you need to take that 127,800 and subtract the 13,400 because it was included. You just exclude it. Here we said it'll be an increase, so I am going to take that 148,000 minus 14,400. So there's an increase. An increase, as I've said, will be an outflow. So it will be 148,000 minus 14,400, which will be an outflow of 33,600. Let's check trading other payables. Trade and other payables, though, as I've said, you exclude SARS income tax. Another thing that you need to exclude from trade and other payables, guys, is accrued expense. But if and only if it relates to interest on loan. Here I'm just going to exclude this two, which is 4,200. And for 2022, I'm going to exclude 46,000. That's it. Now, let me check. It means that trade and other payables for 2023 will be 142,800 plus 7,000. Okay. This will be for 2023. Okay. And let me see how much that gives me. It gives me 149,800. But from this, I'm going to, let me just put it like that. Let me just put it like that. And then calculate the one for 2022, which will be 134,200 plus 26,000. Okay. Which gives me 170,200. And you will have noticed that for 2023, it was 149,800. And for 2022, it's 170,200. So there was a decrease in trade and other payables. Now, a decrease in trade and other payables is a cash outflow. Okay. So how much will be the cash outflow here? I'm simply going to take this 170,200 and minus how much was it again? Just check. It's 170,200 minus 148,800. So I'm going to take this 170,200 minus 148,800. It was 149,800, right? And then it'll give me a cash outflow of that much. I just need to confirm this. Yes, 149,800. So it's 170,200 minus 149,800. It'll give us a cash outflow of 20,400. Note that I only excluded SARS income tax and shareholders for dividends and nothing else. So let's just quickly do that. So you will put that in your trade and other payables, which is a decrease. And as I've said, a decrease will result in a cash outflow. Okay, it gives me 160 here. What did I get wrong? Let me just go back quickly. Let's just go to my calculations there. So I took 142,800 plus 7,000. It gave me 149,800. That's good. And what is 132,200 plus 26,000? 134,000. Oh, I wrote 36,000 here. Okay, my bad, my bad. So basically it'll be this much, 160,200 minus 149,800. So what I typed here is actually correct. And it'll give me, it doesn't change, it'll give me a cash outflow of 10,400. Now, when you take that negative, you will take negative 278,000 minus 33,600 minus 10,400. It'll give you 322,000, which is a cash outflow, right? From changes in working capital. Then you're going to take that 1,134,350 minus 322,000. It'll give you cash generated from operations of 812,350. That 812,350, I will put it under operating activities as cash generated from operations. Continuous accuracy, get a mark for that. Awesome, isn't it? I know. All right. When it comes to interest paid, we were given interest paid, which was 50,000 something. Let me just quickly look for it. It was 50,350. Yes, 50,350. There it is over there. So my interest paid will just be that. Here it was quite simple because interest was not capitalized. But if it was capitalized, you will calculate it just like you calculate dividends paid. Last year's amount, you put it in brackets because we need to pay this year. You take interest from the income statement, you put it in brackets. Interest from trading other payables, which is accrued expense, you will put it without brackets because that one will only pay the following year and it will give you interest paid. But you didn't need to do that here because it was just given to you as 50,350. So you will just write it like that. Interest paid will be 50,350. Then let's go to the next one. And for the next one, I am going to focus on net change in cash and cash equivalents. And before I can even get there with my net change in cash and cash equivalent, because I love working that way, guys. Okay. What I'm given, I put it first and then I go to net change in cash and cash equivalent. And when I look at, remember what I said to you? I said to you, we were not given cash and cash equivalent for last year, all right? Actually for last year, it was given to us, which is 68,000, but cash and cash equivalent for the current year was not given. We were also not given bank overdraft, which is a problem to us. So can I calculate net change in cash and cash equivalent without that information? And when you look at additional information, there's nothing that can help me calculate cash and cash equivalent at the end of the current year. There was nothing that could help me do that. So can I start with cash and cash equivalent? And the answer to that is no. I will just leave it for now and work with the body of your income statement. I mean, of your cash flow statement. Work with it until it leads me to something else. All right. The next one, guys, I'm going to deal with will be my dividends paid. Okay, I'll just deal with dividends paid. And when it comes to dividends paid, where do you get the information? Information about dividends paid, you will get it in trade and other payables as shareholders for dividends. Those will be final dividends for this year as well as final dividends for last year. But I can't calculate dividends paid because dividends paid, it's only this year's interim plus last year's final. So I'm not giving this year's interim and I'm not giving total dividends. They need to give me something. I need to be given something. The next one I'm going to deal with dividends paid. And as I've said, with dividends paid, I'll check what I have. I know I have shareholders for dividends for this year and last year, which is good. And when I have those, this is what I will normally do. Okay. Um, just write it down. Obviously, you will have to write this down. I will take 46,000. 46,000 will be with brackets. and the 80,000 will be without brackets. Okay, so I need in between, I need my interim dividends for the current year as well as final dividends for the current year, of which I'm not giving retained income note here. So it has to be under additional information. And under additional information, I read something about interim, which is point number 3. We declared interim dividends of 30 cents, which must include these dividends here as well as those dividends. So I'm going to add, those shares as well as those shares. I'm going to add 1.3 million and 50 added with these additional shares that were issued on the 1st of July. But again, they didn't tell me how many shares were issued on the 1st of July. So all I'm going to do, guys, is to scrutinize everything. And you will notice that I was given ordinary share capital for the beginning of the year as well as the end of the year. Okay. And they said there were no buyback of shares. There was no buyback of shares. And it makes sense why it increased. And you will know that it increased by 300,000. From 5,400,000 to 5,700,000, it increased by 300,000. So we issued shares and we raised the share capital of 300,000. And those shares were issued at 3 Rand. So we issued 100,000 shares. So I'm going to take that 100,000 shares and add it with 1,350,000. It'll give me my shares issued just before the interim dividends were declared. Now, just to put it in writing, this is what I will do, guys. Okay. So basically, when it comes to dividends paid, I've got this. It's 1.350 shares, and the share capital was 5,400,000. But I know that I issued shares at 3 Rand on the 1st of July. But my closing balance of shares is 5,700,000, and there was no buyback of shares, which means that I only issued shares on the 1st of July, which raised my capital by 300,000. How did I get that 300,000? It's 5.7 million minus 5.4 million. And then you just take that 300,000, you divide it by 3 Rand, it'll give you 100,000 shares. So in total, there was 1,450,000 shares issued after after July, and they remain the same until the end of the year. So I'm going to take that 1,450,000 and multiply them by 30 cents. That'll give me my interim dividends of 435. So I'm going to go back to that calculation I showed you. In between there, I'm going to put in 435,000, and then it'll give me my dividends paid of 401,000. Otherwise, I would have taken last year's final dividends, which was the 46,000, and just added with 435,000 was going to give me, it's actually negative 40, was it negative 46,000? Yes, it's this year's interim, and I took, yes, this is this year's interim. This is my dividends paid. The other one is actually wrong. This is my dividends paid. So I will add this year's interim with last year's final, and they will give me my dividends paid. And that's it. That's it, guys. Okay. Using the table that I wanted to use there, I would have to take this 435,000 and add it with this year's final dividends. And I wrote them down. It's just unfortunate that I erased them. This year's final dividends amounted to 80,000. So when you use that formula, you'll have to take your final dividends for this year, which is 80,000, and add it with your interim for this year, and then subtract, and then add back the final for this year. It's basically going to give you the same amount, which is 481,000, which is your dividends paid. Okay. So remember your dividends paid last year's final will be shown in brackets. This year's dividends, which is your interim plus final, will be shown in brackets, and this year's final will be shown without brackets because it'll simply be paid the following year, and that'll give you dividends paid. So it's minus last year's dividends, minus this year's interim plus final, and then plus this year's final, which the final dividends, as I said, you'll find them in trade and other payables. And the final for last year was 46,000. It has to be paid this year. The final for this year is 80,000. It'll only be paid next year. So for this year, we'll show it without brackets. And I will simply take the negative 46,000 minus this year's interim plus final, which was how much? Let me just quickly calculate it. This year's interim, it was 435,000, and this year's final was 80,000. So this will give me my dividends for the year, which is 550,000. So basically, if I was to go back to the calculation of dividends, I will take last year's, which is, it'll be negative 46,000 minus 515,000, and then plus this year's final. And my dividends paid will give you the same amount as I've said, which is negative 481,000. Or you could have just taken the 46,000 for last year and minus this year's interim of 435,000. It'll still give you dividends paid of 481,000. It's totally up to you as to which method you use between the two. And I used the long method to calculate that, and this is what I got as my dividends paid. My dividends paid will be 481,000. Got it? Good. Let's go to income tax. Income tax here, I feel like it was very, very easy because you were given income tax here, which was 313,600, and sales income tax for last year, where was it? SARS income tax for last year was in trade and other receivables. It means that it was owed to us by SARS. So we will show it without brackets in the current year. And you subtracted the final income tax expense for this year, which is that 313,000. Let me just show it to you as a calculation. So I will simply take last year's, which was 13,400. Okay. I will show it without the brackets. And this year's income tax, which is 313,600, I will show it with brackets. And then I'll check where is my sales income tax. Obviously, it's not in trade and other receivables because when you look at trade and other receivables, there was nothing for 2023. There was nothing for 2023. It means that sales income tax for 2023 was in trade and other payables. There it is. It is 4,200. So because it was in trade and other payables, it means that we will show it without brackets in the current year, as it will only be shown with brackets. It means we owed it at the end of the year. It means we overpaid. If you know your provisional tax payments, please check my adjustments on provisional tax. It means that your provisional tax payments were exceeding your income tax. That's why actually your provisional tax payments in this case were not exceeding, they were understated. Okay, they were less than your final income tax, and that's why you still owe SARS. So it means you didn't pay it. So it's not a cash outflow. So you didn't pay this 4,200. That's why it's not a cash outflow. And it'll give you your tax paid, which will be 296,000. Got it. You sure? Do you understand why 13,400 is without brackets? It was in trade and other receivables last year. So this year, we will receive it. That's why it is without brackets. The income tax expense from the income statement for the current year will always be in brackets. And that 4,200, the reason why we're not showing it in brackets is because it means our provisional tax payments for the current year were less than the final income tax. So we did not pay that 4,200. That's why we are owing it. That's why it's in trade and other payables. So we just added that will be shown with brackets the following year. Basically, when I put it here, I will simply put it as I said, and it'll give me 296,000. Now I'm going to take 812,350, subtract 50,350, subtract 481,000, and then subtract 296,000. It'll give me that much. Okay, so that'll be my cash flow from operating activities. Done with it. Now we're going to go to cash flows from investing activities. First thing I'm going to start with will be the purchase of current assets. I realized that for tangible assets, I have 6,448,200 for last year. For this year, it's 6,484,200. I have depreciation as well. They also gave me the disposal. Remember that disposal that they gave me? So I'm going to use that as well. Okay. Let's do it in workings. So we had 6 million as balance for last year. We did not buy any assets. The disposal was 5,000 and depreciation was 57,000, and the balance at the end was 6,484,200. And I wasn't supposed to have put additions as a zero. It's supposed to have been a question mark because I don't know if we bought or not. And I'm just gonna quickly go and read it. They said fixed assets were purchased. So we did buy during there. So it can't be zero. I will need to put it as X. And for you to calculate the value of your additions at cost, you just have to work in reverse. So you're gonna add this 56,000. So you're gonna take the 6,484, add 56,000, add 5,000, and then subtract the 6,048,200. And that'll give you additions. And your additions here, guys, please note that you show it without brackets because it's additions, it's increasing a tangible asset. It'll be 498,000. But in the cash flow statement, additions affect your cash negatively because you are losing money. You are buying an asset, so you're losing money. That is why when you put it here, you will put it in brackets. In the tangible asset notes, you put it without brackets, but when it comes to the cash flow statement, you put it with brackets. And be careful. Last year, they said something that was very, very interesting. Juza asked it interestingly well, where he said we bought an asset for 1.5 million, but we were given 10% trade discount. It took you back to grade 9. The cost of an asset excludes the trade discount. It is the cost price, the purchase price that you're either owing or you're paying. Now, if you're giving the discount, you're not paying for the discount. So if they gave you 10% discount, it means you're only paying 90% of the purchase price. And that purchase, 90% of the purchase price becomes the cost price of that asset. Okay. And again, they might say, he might put other things like, we bought an asset for this much, you were given 10% discount. So you're going to take that 1.5 times by 10%, and then they'll tell you that to assemble this assets to make sure that it's ready for use, they spent 500,000. So it means that you need to take 1.5 million times it by 90% and add 500,000 because it includes any other cost attributable to making sure that the asset is ready for use. So that's what the cost price includes. Okay, now normally that one they will include it under tangible assets. Understand, guys, the cost price of an asset include any other directly attributable cost, which can be the cost of transporting the asset from where you bought it to the entity's premises, and all the costs that you incur to make sure that, like for instance, if I bought a laptop from Eve Tech, I'll pay for transportation for that to my property, and then I will also pay cost to make sure that it's functioning well, the programs I installed and everything else, I will include them in the cost of that laptop. Because I can't just use it as it is unless the programs are put in or additional things are put into the laptop. So any additional costs that are directly attributable to the usage of the laptop, I have to add them to the cost price of the laptop. I hope it makes sense. All right. And then the other one, guys, was the proceeds from the sale of your asset. It was that 5,000. Remember, we sold it for 5,000 Rand. So I'll show that without brackets. The other one will be an investment in fixed deposit or de-investment in fixed deposit, of which here it was not given to us. So I'll just put that as 0. So your cash flow from investing activities will be minus 498,000 plus 5,000. That will give you 493,000. Under financing, guys, I know I have shares. I sold shares. You remember it was 300,000, and then I did not buy back any shares. Interestingly, it's shares as well as loans. So here I will put in the issue of shares, which was 300,000. Do you remember that one, guys? And when it comes to the loan, it was given to us in the loan statement that we took a loan. So that will be an inflow. Okay. It'll be an inflow. When you take a loan, it's an inflow. When you receive that loan, you record it. There it is on the 1st of June. It's an inflow of 130. So I will show that without brackets. And then we made our repayments, okay? We made our repayments, and I'll come back to the repayments part. But when it comes to proceeds from loans, you will show it without brackets because we received the money. Oh, I already recorded it. And the amount, how much will it be? It's proceeds from long-term loans. It was given to us. As I said, proceeds from long-term loan, you will show them without brackets, guys, because you are receiving the money. You are receiving the money. So when you take an additional loan, you are receiving the money. That additional loan will be recorded in the cash receipts journal. It takes you back to grade 9. Notice that we did this in grade 9. When you receive the loan, it's recorded in the CRJ. You show it without brackets. $30,000 will be shown without brackets. Okay. You will show it without brackets because you're receiving its proceeds from the loan. It means you're receiving the loan. Now let's get to the repayments part. Very interesting. With the repayments part, you'll just have to work backwards. So I'm going to take the 320,000, subtract this, subtract the interest, subtract that. It'll give me the question mark, which is the repayments. The repayments here will be I'll put it with brackets, obviously, in both the statement as well as the cash flow statement. But the one that goes under financing, that 260,350, it includes interest of 50,350. And remember, interest paid was already included under operating activities. So we can't put it twice. So you need to take that 260,350 and minus the interest component, which is that 50,350, okay? Because if you put it as 260 under financing, it means that the 50,350 has been included twice, has been paid out twice, and that is incorrect. So when you record it in your cash flow statement, you will take the 260,000 and then add the 50,000. So it'll be negative 260,350 plus the 50,350. We are canceling the interest because the interest is already there. So from the 260, you need to exclude that interest. So the remaining part will be the capital portion, which goes under financing activities. And that will be 210,000. I hope it makes sense. Okay, and then you will just have to take 430,000 minus 210,000 will give you 220,000. Now, when you take this and minus that and plus that, it should give you net change in cash and cash equivalent. Let's see how much that will be. It gives you negative 288,000, which is a cash outflow, right? And this is what you will get. But we were given cash and cash equivalent at the beginning of the year, which was a negative. It was in bank overdraft, if I'm not mistaken. Let me just check. I don't want to say wrong things here. It'll be bank overdraft if it's under current liabilities. If it is under current assets, in this case, it was under current assets. It's definitely not a bank overdraft. So it's a positive bank balance. So we'll definitely show it without brackets. So what was the balance at the end of the year? Um, so note that the net change is that we had a cash outflow of 288,000 and it moved from positive 68,000. So it means that it went down to, it went down to 220,000. How did I get that 220,000? I simply took 288,000 and I subtracted the 68,000. So you take your net change in cash and cash equivalent, you minus your cash and cash equivalent at the beginning of the year. It'll give you your cash and cash equivalent at the end of the year. And to make it easy, guys, this is how it works, okay? So at the beginning of the year, you had a positive 68,000. But this year, your cash moved negatively. You lost cash worth 288,000. So your balance at the end of the year will be negative 220,000. That's how easy it is. Okay. And that's why your cash and cash equivalent at the end of the year is 220,000. And that's it. Okay. I just added additional things to this question. Um, just to make sure that everything is complete. And this will be November 2016, paper 1 IEB. And that's it. I promise to post a cash flow statement until tomorrow. I've done it for today. And I'll do another one probably later on for tomorrow. I don't know if I'll have more time to post more, but if I do, I will. And this will be your cash flow statement. Okay. Um, and these are the questions that you can try out. I will try by all means to also post a lot of GDE or DBE papers this year as well. I'll try my utmost best. That's it from me. Enjoy your Easter Sunday. Also,